Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, February 15th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Start with the big picture, work our way into the day itself. We just did last week come off this targeted support, long-term support. This week, 171.79 on the weekly chart. It's a little higher on the daily chart. 177 and a quarter is also part of that targeted support area that we tested last week. It's a downside 5/8 Fibonacci from the January 23 low against the more recent July high. So we have met the objective that was considered attainable. When we were testing the 255.60 channel top, we'd mentioned how you should prepare for that, or at least you could prepare for that possibility by reaching for 170 or 180 strike out of the money puts. Now that play has occurred. It is now complete. And the question is whether we're going to round back up to 255.60. So inversely, we could reach over the next 2 to 3 months back to the 255.60 channel top. We could trade inside of this channel structure for months to come. And the clear indication for whether or not we are actually expecting 255.60 is a settlement in the coming weeks above 211.59, this newly formed descending one-third speed line that is based in part on the low that was put out a little over a week ago. Now, this 211.59 speed line, once we tested the channel bottom that is presently at 172 even on the daily chart, we've been mentioning how this should be considered a 3 to 5 week target. We're a week and a half into that right now. There's plenty of time left for that to be satisfied in terms of the time horizon. In fact, I'm going to jump to the daily chart now, or we were at the daily chart, but I'm going to zoom in a little bit. We've had this descending one-third speed line that today is at 185.78. Yesterday was at 188.19. I'm going by memory. I think that was the number. And we did close above it, not by a wide margin. Under other circumstances, I might consider that to be too close to call. But because, this speed line is descending at a pretty steep pace, and we are wrong word, likely to open above 185.78 on Thursday. That's also a little strong. We could actually open below it. I'll get to that in a moment. But I'm just going to assume, for the sake of this conversation, that we're going to open above 185.78. And if we do, that's decent support for the day, and actually, I think, a turning point as we move into next week. The other thing that occurred on Wednesday was closing above Tuesday's high, which is the pullback low week. And it's very similar to the actual high that was put out on Monday, that reversal high. That low is at 187 and change. I don't remember the exact number. I think maybe 187.26, something to that effect. But we closed above both the speed line and the high of the low and the low of the high. We closed above all three. So I do think the market is set up for recovery today. The 194.19 trend line in reach, simple trend line off those highs. And I do think, and I'm assuming, that we're going to close above 185.78 today. The strong assumption, I know, but based on what I just said, I think we have shifted in that direction. Remember, we came off the 172 even long-term support anyway a week and a half ago, and so we are, as a 3 to 5 week target, still anticipating 211.59. So holding above 185.78. Closing today above 185.78. We closed above that speed line on Tuesday, so we are in a buy signal as I speak. That 198.55 rising channel top should be considered a 2 to 3, 3 to 5 day target. somewhere in there, I think, is pretty realistic. If we close today above 194.19, we should tomorrow, Friday, test 198.55, where we can top out on a daily basis, possibly fall away for several days, and it would be a settlement above 198.55 that would signal 211.59, our 3 to 5 week objective, within probably just another 3 to 5 more days. For 3 to 5 day swing traders, I think you can go long at 185.78 and anticipate 198.85, where profits can be taken and perhaps short sale pursued. If we close above 198.55, however, that is a go long strategy yet again for the 3 to 5 day swing trader, then anticipating 211.59 over that time frame. 211.59 can contain buying through March, so we could rally to 211.59 perhaps by the end of the month, by the end of February, and from here fall back all the way through March, back into the low 170s again. We could trade inside of this gradually narrowing wedge for the next several months, potentially. But it would be, as I said earlier, a settlement above 211.59 that would signal bullish continuation over the following 3 to 5 weeks or so, back to the 255.60 channel top, where we could top out on a monthly, possibly quarterly basis. And this area I think you can prepare for anyway. As we were dipping into the low to mid 170s last week, you may have already reached for 250 or 255 strike out of the money calls that don't expire for at least 6 months. Or perhaps you were reaching for 210, 215 strike out of the money calls that don't expire for at least a couple of months, 2, 3 months. I like to go out twice the distance on those expiration dates as the perceived time in reaching the objective. It's about as simple as that, because the last thing you want to see, nothing is more frustrating than buying the right strike, having the right trade, but choosing the wrong expiration date, have the market rally up to your strike, only to watch it expire next to nothing. All that hard-earned time and frustration, no payout, and you deserve the payout. So go a little further out in time. It costs a little bit more, but you get more bang for your buck. That delta stays intact. Responses to volatility are much better, and the theta is reduced. The time decay element is reduced the further you go out. You probably know all that anyway. Let's talk downside today. If we break, especially if we open today back below 185.78, I do see 181.06 in reach. That is the low settlement price that was put out a week and a half ago. We could break even further south. I don't see 172 even today. What is possible, though, is 177 and a quarter. And that is, once again, that long-term Fibonacci level that we did test a couple of weeks ago, that 5/8 downside. So, that is possible today. If we break or open below 185.77, we could test 177 and a quarter. That would be within the range, the normal range of daily range. Volatility wouldn't spike too much if we tested 177 and a quarter today. And if we close today below 185.78, we are back into, how should I put it? Short-term sell signal mode. Over the next 3 to 5 days, 172 even in reach. Now, I know we were back in that mode just a couple of days ago on Monday when we put out the key reversal high and we settled back below that 2-week channel top. We did get 1 day downside, but this recovery, a modest recovery that occurred on Wednesday, the settlement above the descending 1/3 speed line, the settlement above Tuesday's, the high of the low, above Monday's low of that high. All that put together, I think, presents a strength as we move through the rest of the week. 194.19 likely over the next day or two, and over the next 3 to 5 days, 198.85. Now, if we close below 185.78, just the opposite, expecting the low 170s again over the next 3 to 5 days. The low 170s being 172 even on the daily chart, 171.79 on the weekly chart. If on Friday, tomorrow, not going to happen, but if over the next week, 2 or 3, we do close any week below that 171.79 channel bottom, it would need to be by a 1% margin. This week's 1% is 170.07. So if we close tomorrow at 170.07 or lower, which once again, I don't see happening, but if so, then liquidate all those out of the money calls you might have purchased. Go short Tesla into the very low 100s over the following 2 to 3 months. That might involve options traders reaching for 100 strike out of the money puts that don't expire for at least 6 months. I think I've said it all. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. You will not regret it. I'm going to leave it at that for Thursday's Tesla report, and you have a great day.